All right, one last thing I'm going to change up a little bit on you. When you have a merchandise business, you start to add these new accounts like COGS and sales revenue, and you have sales discount and sales purchase or returns and stuff like that. It sometimes needs a little bit more information, a little bit more help to communicate to the investors. So that's why they have what's called a multi-step income statement. It's a little bit different than the income statement that we talked about in Chapter 1 and that we used in Chapter 2 and 3. This is slightly different. I want to show you what the old one looks like. The single step, what we call the single step income statement, that's what we know. That's what we've been doing up to this point. And it looks something like this. You have your revenue, and you have total revenue out to the side. And then you have your expenses, and you have that out to the side. And you subtract total revenues minus total expenses. That gives you net income. The line is really off on that one. I don't know why. But that's what we know, okay? And that's good to a point. But from an investor standpoint, I want more information. I want to be able to look at this and make more decisions or better decisions very quickly. So that's why they came up with the multi-step income statement. So what is a multi-step income statement? It is a more informative income statement. It breaks things down into a different way. It's going to move some things around that's going to make it a little bit tricky for you. What it does is it separates net income, what we know as net income, it separates into operating income and non-operating income. The income stays the same. It's still revenues minus expenses, but now it's operating revenue minus operating expenses gives you operating income, and then non-operating revenue minus non-operating expenses gives you non-operating income. So again, it's a little bit more work, but it's a lot more information. What are these different new categories of operating versus non-operating? So operating income refers to the amount of income that comes from non-recurring business operations. Or excuse me, normal recurring business operations. These are the things that are day to day. And the reason why we do this is because as an investor, I want to know what I can assume is going to happen year after year after year. Your sales revenue, that is an operating income. That's part of operating income. Because I can assume that that's going to be something that's going to happen year after year after year, so I can anticipate that. On the other side, you have non-operating income, and these refer to items that are not expected to recur on a regular basis. These are things that are kind of like one-off. They happen this year, and I can't expect them to happen year after year because they're not part of my normal business. If I purchase some land just to sell, but I'm not in the real estate business, that's something that's only really going to happen one time. And so therefore, I got to show my investors, hey, don't expect this every year. This is just a one-time thing. I made a large amount of money off of Bitcoin this one year. Don't expect it next year. Okay? And so that's what this is dealing with. So let's look at how it works in the example. Okay, so here we have a multi-step income statement. And I'm going to start with operating revenues. Okay, so what are my day-to-day revenues? So I may have some sales revenue. Okay, and to that, I'm going to subtract out my discounts and my returns. So I'm going to say less discounts and returns. That's going to give me those together are going to give me a certain number. Subtract that from my sales revenue, and that's going to give me my net sales. And notice I'm pushing these sub-calculations out a little bit. Okay, so then I have my net sales. Now here's one thing that is really going to throw you for a loop, because not only am I going to add my revenue here, but there's also one expense I'm going to add up under operating revenue. I know it's not an expense, but just bear with me because again, it tells you more information, gives you more information. I'm actually going to include cost of goods sold up under here. Yes, it's an expense. But if I take my net sales and subtract out my cost of goods sold, that's going to give me my total operating revenue, or what we call my gross profit. It lets my investors know what I've made off of my sales alone. And that's a huge number. That's what we want to know. We want to know what your profit margins are. That's where you get that from. So that's why we include that expense up into the revenues. That's the operating revenue side. Then we go to the operating expense side, and then we just start listing those out, whatever they may be. Selling expense, general admin expense, whatever it may be. Utilities, whatever. Okay, add that up. That's going to give me my total operating, it should say expense. Just copy and paste it. But total operating expenses. Now, if I subtract my total operating revenue minus my total operating expense, that's going to give me my total operating income. Okay, that's half of the multi-step income statement. Arguably, that's the bigger half of my operating or my multi-step income statement, because that tells me what I can expect year over year from this company. Now let's look at the non-operating side. Now I do want you to notice it says non-operating activities. It doesn't say non-operating income or revenue. It doesn't say non-operating expenses, because these are few and far between. So this is not going to be a very large section. They're just going to put them all together. And as of this moment, I believe we've only talked about 4 different types of non-operating activities. I've only put 3 of them on here, but I can give you the fourth one, or you can actually guess the fourth one. But we have interest revenue goes up under non-operating activity, or interest expense as a negative number because it's coming out. And then you also have the gain on the sale of something. In this situation, we use the land. Or as you can imagine, you can have the loss on the sale of land or whatever that asset is, and that will be a negative. If you add all those up, that's going to give you your total non-operating income. And if you add your total operating income to your total non-operating income, that will give you your net income. And that is your bottom line figure for a multi-step income statement. If you don't have COGS, or if you don't have any non-operating activities, then you don't necessarily need a multi-step income statement. But if you do have those, it is great for investors to be able to see the whole picture, and there's no assumptions being made. Appreciate it.